Hey guys, welcome to EIKV and this is Vishnu. So in this illustration, there is a company called Chemicals and Fertilizers Limited. So Chemicals and Fertilizers Limited, which has a profit of rupees 8 crore 98 lakh 7,500. The profit. So the following details are also given. So you need to make a profit reconciliation statement with this. So they have given opening stock and closing stock of finished goods and semi-finished goods. Then urea and transport subsidy has been received. Then expenses for CSR is given. Profit on sale of fixed asset, chemicals used internally, favorable rate of exchange variables, post-retirement medical grant, purchase tax refund, and litigation recovery. So these are the details which is given in the question, and you are required to prepare a profit reconciliation statement for the respective year. So I'm directly going towards the answer. So I have made the heading as Chemicals and Fertilizers Limited reconciliation statement of financial profit and costing profit for the year 31st March 2018. Then a table which contains two amount column, one is sub amount column and the main amount column and the particulars. First of all, I have made a column which contains profit as per financial statement. So let us check. So profit as per financial statement which is given in the question as 8 crore 98 lakh 07.5. So here which is shown in thousands, so 89,807.5. Then the next thing is that we need to add all the profit which is taken in financial statement and which is not considered in cost statement. So some of the profits are profit on sale of fixed asset. So the sale of fixed asset will easily affect in financial statement, but when we compare with cost statement, in cost statement we will not consider any profit on sale of fixed asset, right? So when we check this 89,807, the profit of rupees 150 has been already included in 89,807. So when we are at the level of computing or arriving at the costing profit, so for that, so we need to deduct the profit on sale of fixed asset from 89,807, right? Yes. Likewise, urea and transport subsidy is already included in 87,807 and which is not relevant in the cost statement. Therefore, we need to deduct that amount 3,348. Then favorable exchange rate is also same like which is already entered in the profit of 89,807. So for arriving at the costing profit, we need to deduct such amount. Likewise, litigation recovery and purchase tax refund, which is also considered in financial statement but will not be considered in cost statement, but it is already added in financial statement. Therefore, to arrive at the costing profit, we need to deduct such amount. Okay, for chemical used internally, we have given an amount of 17. So the 17 amount is nothing but when we deduct 382 from 368 or 365 from 382, we will get an amount of 17. So here chemicals used internally, we have an extra cost of 17, or the cost is more in financial statements, right? But cost is less in cost statement, right? So the difference is 17. So an amount of 17 is more in financial statement. An expense of 17 is already entered as an expense in financial statement. So for arriving at the cost statement, we need to deduct such amount, rupees 17. Okay. Now we need to add expense not considered in cost statement. So expense of CSR and post-retirement medical grant. So these two expenses are expenses which is taken in profit and loss account, or which is already affected in profit and loss account, right? But when we consider cost records, we will not or we need not consider these two expenses, expenses of CSR and expenses of return. Therefore, we have already debited in P&L account. Therefore, we need to add it back. Okay. After that, we have stock adjustment. So the stock adjustment is nothing but I have made another column which contains cost statement. I have made financial statement and cost statement, amounts in financial and cost, semi-fixed goods and fixed goods at opening, and semi-fixed goods and fixed finished goods. Semi-finished goods and finished goods in opening, semi-finished goods and finished goods in closing, and I have take the total of each finance as well as costing, and then I have deducted opening, stock of opening minus stock of closing. I get an amount of negative 9660 and 6070 at costing. And when I take the difference of both, I get an amount of 3590. Right? Yes. So here we have an excess amount in, or an excess effect of 3950 in finance when compared to cost. Therefore, such amount needs to be deducted. So for arriving at the costing profit, we need to deduct from the profit of rupees 89807 minus 1387 and plus 650 minus 3590, will get an amount of costing profit as 35470.5. So guys, thanks for watching this video. I hope you got clear and complete clarification regarding this illustration. Thank you.